We have already arrived to our second session, which is, as I mentioned already, mainly about the topic of de-risking. I'm really looking forward to Christian Dahlen, angel investor and vice president of SAP, who is joining us live from California, to Daniel Spitzbart from Tech Startup School, to Chris Mikoda from Squad Tech, and last but not least to Julia Luxan and Christiane Feichter, both from Jarolim Partner Rechtsanwälte. Tommy, are you ready? Then let's start with session 2.
I'm ready. Thank you, Julia. Hello, Christian. Great that you joined us this morning. We have to say morning because you are in California, right? So in Palo Alto, where you're living with your family. So I hope it's not too early for you. But as you mentioned to me, you're used to get up early because in order to connect with Europe. So thank you that you're here today on our session, how to make a hardware investment attractive. And we called it precisely de-risking, because starting a startup in a hardware field, you have many more risks and many more costs. We heard it from Pascal earlier. So de-risking and taking de-risking steps in every potential step there is the topic of this session. Yeah. So Christian is a very experienced investor. He's a member of the Band of Angels. It's a group of 150 plus angel investors who are former or current high-tech executives investing their time, importantly, but also their money, more importantly, into cutting-edge startups and technologies. They've invested in 277 companies, 60 have had a profitable M&A exit, and 11 actually had an IPO since 1994. Furthermore, Christian is a vice president at SAP, which he joined in 2006. He now advises executives at the management level about machine learning, blockchain, network, software as a service. Prior to SAP, he worked for Kabel Deutschland. He entered Kabel Deutschland through exit at home, as I understand, and was previously a couple of years at McKinsey. As an angel investor, Christian not only invests into platform and in softwares, but also into hardware startups. One of the investment is Wandelbot here in Germany, but importantly also DeepSpin, which is a company that has developed an MRI system, magnetic resonance imaging system. You know these systems at the doctor, which are huge, very expensive, very loud. And their goal is to make it portable, affordable, and actually easy to use. Yeah. To make sound investment decisions, it helps to have a PhD from Stanford and being a mechanical engineer from RWTH Aachen. So Christian, very welcome here from Germany to Palo Alto. We're happy to have you here.
Well, thanks for the kind introduction. Yeah, and it's actually not that early anymore here. It's 7:30 now, so I've had enough time to get going here. So
for some people in the tech team, that's very early. I can tell you that.
Well, you know, I used to work for a company where half of the company was media people and half of the company was engineers. You could always tell the engineering parking lot was full at 8 o'clock in the morning. And so here in California, and the media people arrived at about 10. So
yeah,
it's all relative.
But I hope the media guys worked a bit longer than in the end. Huh?
Yes, they did. Yeah.
Cool, Christian. Let's start with the first question. As we mentioned also early in the sessions earlier, most investors look into opportunities to invest into software and often shy off from investment into hardware assets. And actually previous Launchpad, we had one startup entrepreneur, Niels Berger, that mentioned for IoT products, there's always a T, right? The thing. So there's always going to be something, a T, a thing, an interaction with something. So of course we'll have software and platforms, but we'll always be as flying in a volocopter, sitting on a UNU. There's always going to be things. So how do you rate investment in hardware startups?
Yeah. So you know, I think there was a lot of investment in IoT and in hardware overall, right? I mean, we'll talk about this maybe a little bit later, time permitting. But when I look at sort of, you know, the world at large, if you look at investment, of course, you know, it's an investor preference, partly what they want to invest in. But one can't say that there is not, you know, investment in hardware-related startups. You know, because you had some fantastic speakers before, and when you look at the world, you know, clearly there's a lot of investments there. But I do think what's important is, and I like what you said, you know, the IoT, it needs a T. Well, the corollary is it needs an I, right? So it needs internet and software. And I think we just heard that expressed by Pascal about, you talked about UNO, right? And all the systems that go into the UNO scooter. So I think the interesting piece now is not just having pure, or it's, let's say it's rare to see pure hardware investments where it's just a mechanical device, right? That's not extremely valuable, right? You need to go beyond that and figure out what the value is, and ideally a value for an end user. Right? So there's, if somebody comes and says, I built a new valve for something, that's probably not very valuable. It's valuable for some people, but not for an investor, right? Investors, it's an industry that's driven by return expectations, and, that's not for every investor. Then if it's a small mechanical component only, it's maybe a great thing, but, then you need to find other ways of securing your funding, right? So the interesting thing now is, everything has an internet connection. Everything that is built can be connected and should be connected to the internet, right? And that's what's interesting. That's where, I've made a lot of investments in the US and in Germany in that IoT space.
Mm. I mean, we heard it before from Stefan from Volocopter. They said, look, of course, the driver in the end will be the software, the connectivity, the autonomous flying is all driven by software and platform connection, but ultimately they need a volocopter to fly. Yeah? So I don't think any startup will start today to develop a hardware product without any internet connection, without any platform function, and that being actually the driver in the end. But still, you still need it. So that's the dilemma in the world that you have there. Yeah.
Yeah,
but,
absolutely.
Yeah. If you compare Europe with the Silicon Valley, the investment criteria, the way investments are looked at, and as we mentioned, yes, of course, there's been investment in hardware, but tendencies are there that the scalability looks on the software side much higher than on the hardware side. And in particular in Germany, of course, we love to touch things. We love products, and often you get shiny eyes when you see something on a table at a startup fair or something. How can you compare these two worlds from an investment perspective?
Well, I think everyone likes to touch physical objects, right? There's something about the tactile experience, and then, again, when we just heard Volocopter and Uno, those are experiences that, at least as of today, are difficult to replicate in software, right? So there's something about those experiences that makes this, at least in a consumer-related world, really interesting, right? And if you just think about the iPhone and the tactile interface on the iPhone, right? That was a complete change from, the BlackBerry keyboards, which are, much more mechanical at the end of the day, right? So, things come and go in waves, right? Here in Silicon Valley, we had a big wave on consumer-related hardware startups, IoT startups. So if you think about Fitbit, you think about the Nest thermostat. So that was, you go through these waves typically, right? And now there's a whole plethora of hardware startups everywhere you look, right? A lot of it triggered by Elon Musk and Tesla. Some of it by SpaceX. If you think about sort of the fallout that had, what that's connected to, whether it's LiDAR, whether it's batteries, whether it's space technology, there's all kinds of stuff going on. And, I see that here, I see that in Germany. So, I'd say overall, I'd see more almost similarities. But similarities also in, where you need to go for funding, right? And in general, you need to know which investors to go to who have appetite for and who are knowledgeable about certain spaces, right? If I show up with my hardware startup and I go to a software investor, it's going to be a very short conversation because they're not understanding what's going on, right? But overall, I think we see a lot more now than maybe, let's say, 10 years ago, right? We even see microchips coming back, right? Who would have thought that there's innovation in microchips? That's a space that was considered to be dead, right? So I think there's a lot of activity. I think, where I sit, I'm an angel investor, so I'm at the very beginning of the food chain. You always have to think about what comes next, right? The first round of funding is not going to be the last round of funding, especially not in hardware, because you need more money, you need more capital to build the stuff. So you need to be very cognizant about how this could play out and where this could go to, right? In software, you can be slightly more forgiving, although it's actually, even there, the similarities are bigger than the differences, I would say.
Mm-hmm. So when you're looking at teams that present you with a new hardware solution, thinking maybe of DeepSpin or other startups that you invested in, what are the criteria you look at? What are the skills that you look at? Because they're often not the same as a purely software company. What are the skills that you look at? What experience should they bring on the table that you believe they will succeed?
Mm-hmm. So let me break this into two pieces, right? Again, so the first part is there's something that's similar no matter what you do, right? And sometimes I meet founders and they complain that there are no investors in the space, and like, well, you can find software startup founders who also complain that there are no investors in the space, right? And then you got to figure out, maybe there's something wrong with the startup, right? Or maybe there's something wrong with how you target investors. So the things that are similar is you need to target a large target market, right? It sounds very trivial, but that's a challenge for many founders, right? You need to, as an investor, you need to have a return. That means you need to have large markets. You need a strong founder market fit. That means the founder needs to understand really the ecosystem, and I think we just heard that with Pascal and Uno, right? It's very complex, potentially more complex in hardware, so you need to exactly understand how these different pieces play together. And I'm looking for some unique contrarian insight, right? Again, this is similar to any startup, right? But something that makes the founder unique compared to the other 100 founders that show up, right? Mm-hmm. So those are the things that are universally true, regardless of what you do, right? There are some differences, obviously, right? So one is you need to figure out what that interplay is between hardware and software. And typically in the things I invest in, I look at the value coming from the software, right? So think about DeepSpin, you mentioned that. So what DeepSpin is trying to do is completely change how you build an MRI, right? And magnetic resonance imaging. And these are huge machines today. There are big rings. It's a lot of engineering and physics. You're trying to create the perfect magnetic field. And what they said is, well, we don't need the perfect magnetic field. We can actually have a somewhat imperfect magnetic field. We do the error correction with artificial intelligence. Right? So in this case, you need to have a product, an engineering component that's good enough, and the value has shifted to the software component, right? So you're looking at someone who can cover both because there's more complexity, but the hardware often becomes a means to an end. Again, it depends totally, in Volocopter, you can say hardware is a means to an end, right?
Exactly, yeah. You need this interaction of the two, right?
Yeah, exactly. So it depends a little bit where you're looking at, but that's a lot of the opportunities that I see is that value shift, where you need to know both, and you need to understand also where you are in the value chain, right? If you think about space technology, there's ESA Aerospace in Germany, and they started with 3D printed rockets, and then they realized, if you want to capture more of the value, you need to build a whole rocket. Right, so that's also something interesting, as I mentioned before, is how do you capture the most value? Where in the value chain do you play? It's not so different from software investments, because there's a software stack. You need to figure out where in the software stack you play, but you need to be cognizant about that, right?
Yeah. I mean, one of the theories, of course, for startups, not a theory, but the best way to do is to fail fast, right? To come out the MVP, to test the market, to go out. And of course, on the basis of software, you can do it very easily. It's theoretically very nice, but we heard also from Pascal, you need a whole generation of motorcycles to have a MVP that nothing is scrapped. So what is your recommendation to startups to fail fast, to get the idea, even on a mechanical, hardware-driven product, to find out very easily and very soon what works and doesn't work, to change the direction, or even to quit the project as a whole?
Yeah, I mean, you mentioned it already. You mentioned MVP, right? The complexity is, and I see that with my investments, let's say in DeepSpin, you have a dual track development track, right? You have a hardware piece and you have a software piece that they're typically very closely intertwined. Right, sometimes so closely, if I think about Deep Spin. I have another investment in the US called Ampere, and they do basically they use just measurements of electric currents to derive insights about how your machine is operating. So you can't do the hardware without the software, and you can't do the software without the hardware. Right? That makes it hard. What you can do is really think hard about your MVP. You know, in the Deep Spin case where they're talking about magnetic fields, you can simulate the whole thing. You can actually start before you touch anything. You can simulate imperfect magnetic fields, and then see what do I need to do from an algorithmic perspective to come up with results that are interpretable, right? So in some cases, you can build your digital twin, as it were, beforehand and figure out what you need to build on the hardware side to actually, before you actually touch anything, right? So it's a bit more of a scientific approach to some extent, but it eliminates a lot of the risk and a lot of the cost on the hardware side before you touch anything, right? So simulations, you know, the fancy word is digital twin, is one way to obviously do that. And other than that, the general MVP principles apply, which is has to be really minimal, right? You know, this is the opposite of perfection, right? This is good enough so that your user and your customer get a sense for whether that makes a big difference or not.
Exactly. Yeah, of course, 3D printing has helped a lot in this field, but not everything couldn't be done with that. But as you mentioned, and I think that's what investors are looking for, creativity also on how to get to an MVP, even though it is a physical product to get there. So I think I'm sure there's something you have to look at teams and see how they get there. Perfect. Christian, I'm getting a note here from Julia. She's a very tough lady here in the office that the time is over. We have to go on. So I thank you very much. Thank you very much to take your time and to get up as early as this morning to be in touch with us. We wish you a wonderful day. We have the beer for peers at 6:15 our time here. I don't know if you want to join and have a beer for you early in the morning.
I won't have the beer, but I'll try to.
We would love you to join if you have time. That would be great, with or without a beer, right?
Okay.
Perfect. Christian, thank you very much.
Bye-bye.
So now we go to the next slot. We'll have Daniel Spitzbart with us from Technikwerkstatt from Albstadt. It's actually very close from here. And actually, he's going to be live in the office. We're going to see in the next session. And we'll talk about hardware startups and corporates and how can both of them benefit from each other. So see you at the next slot.